Welcome investors, and thanks for joining us on your Investment Advisor channel, where we decipher the markets because you can't control when a storm hits, but you can control how you navigate out of that storm. Joining me today, Mr. Jim Moran, real estate professional, 2 decades in the business with Action Pro Realty. Thanks, Jim, for joining us.
Nice. I'm glad you had me come and visit with you this morning.
Thanks, Jim. Well, let's get into it. Real estate market, you're been in the business for over 2 decades. Your experience with buyers, sellers, investors, and what area do you specialize in?
Typically Pinellas County and South Pasco and West Hillsborough County. The vast majority of it is in Pinellas County, as you might guess.
The past 3 years have been a roller coaster ride.
Yes, they have.
2020, 2021, markets shooting up. 2022, there has been what sounds like some changes across the board.
Yep.
Give us your take on the Pinellas real estate market over these last 3 years and where we are today.
Okay. Well, it's been quite a roller coaster ride. I have been doing this for a very long time, and among other things, I enjoy crunching numbers and looking at statistics. So I think anybody who pays attention to real estate in general, which is pretty much almost everybody, they all realize that things have changed dramatically. So we had this terrific run from 2020, right after the pandemic. To give you an example of a balanced or non-balanced market, historically, there's something called the absorption rate, and that is nothing other than the number of houses that were sold, or condos or townhouses, divided by the inventory at the end of the month. For example, 1,600 sales during the month and 3,000 houses still left in inventory is 54%. That was the highest the whole time I've ever been in the business until a few years ago. So we have the pandemic hit and everything stops cold. And then following that, about June of 2020, things started to get a little bit crazy. So it went from maybe 40%, which is sort of a balanced market. 54% is very much a seller's market. So it went up to 80%, and then it went to 90, and went to 100. And I did bring some information here just to give you an idea.
Real quick, Jim,
Yes.
So the absorption rate.
Mm-hmm.
The higher the absorption rate, and one more time what the absorption rate is?
It's the number of sales transactions during a period of time, like month,
Okay.
divided by the inventory at the end of the month. So 1,600 sales divided by 3,000 inventory is 54%. And that used to indicate a strong seller's market. Well, all bets were off. When the pandemic started to lessen, it went a little bit crazy. So for example, in May of 2020, the absorption rate is 40%.
Okay.
We go to June, now it's 79%. 96%, by December is 109, which is twice what it ever was historically. And it just got crazier. So in March of 2021 was 213%, which meant extremely low inventory and a complete seller's market. And then it started to drop. And eventually...
So all throughout 2021, I'm seeing all hundreds.
All hundreds, yep. And we start 2022, and up to May of 2022, we're still at 128%. It falls off a cliff.
Wow.
Now it
Okay.
drops to 76%.
So from May to June, from 128% to 76%. So this is how you know what type of market we're in, whether buyers, sellers, or
Buyers,
equilibrium.
Right, exactly.
Okay.
So we're right now, as of February, which is the most current information, we're at 52%. Now this is single family houses, but
Okay.
condos follow the same path, if you will. And so condos right now are 32%, so which means it's much more favorable for a buyer, theoretically. So this all sounds like things have changed dramatically, and they have. It was like you flipped a switch. And
What do you think about the buyers' emotions, though? I mean, are they really? Are there buyers out en masse because of all these deals, and are there really deals yet? I mean, I look at the prices. That's something that I have to do for my clients when they want to talk about their current residence, or I'm looking for some kind of real estate trust investment. I got to know. I have to know what real estate prices are. And when I look on Zillow, Trulia, or another, open door, one of those third party, it gives me all the data of the local real estate market. Pinellas, Orlando, let's say I want to go to Jacksonville across the state of Florida.
Right.
It can give me all that information. What I've noticed is I'm starting to see the houses listed listed for a lot longer. And they're starting to cut their prices, but I'm not seeing a massive jump from buyers yet. Am I right? Is that what's happening?
Well, buyers, first of all, as we know, you could get a mortgage at 3%, back in the day. Well, that's now up to almost 7%, which is still historically kind of okay, but compared to if you qualified when you could pay 3% for your mortgage, and now you can't qualify anymore. So there's still a lot of buyer demand out there, and your analysis is pretty much right on the button. The prices have still remained up there. So what's happened is, let's just say earlier last year, there were multiple offers on whatever you put out there. It almost didn't matter what condition it was or anything like that. So you'd have multiple offers, almost all of them over asking price, bidders war, cash buyers always winning, frustrating, first-time home buyers and people in the military with a military background. Anybody, you couldn't. A VA loan, forget about it. You didn't have a prayer because it's the most difficult one to get through. FHA is the next less. Conventional loan is the third, and then of course cash is always king.
Cash was king.
Yep, and
That's
still
right.
is, always will be. But the prices remain up there, even now. So what's happening is the inventory, it's back to the stat sheet here, this is comparing year over year. So it's February 23 compared to February 22. So
yeah. What's going on with inventory?
Well, for closed sales, this is number of sales.
And again, we're talking about Pinellas.
Pinellas County.
Okay, Pinellas.
Yeah, and this is all of them. This is combined single-family, townhouses, and condos. It's everything.
Okay.
So closed sales this February, 1,331. Last year, 1,782. That's a decline of 25%. And then paid in cash has dropped about 30%. That used to be 590, or used to be 837. It's now 592.
Okay.
New pending sales have dropped 12%. New listings have dropped 8%. Pending inventory has dropped 18%. Inventory or active listings is, ironically enough, up 154%. So things are sitting on the market for a long time. And now,
Why do you? Okay, so the inventory is going down, but what was that last date? So inventory.
that's the active listings. So
do you think that's maybe not? Do you think there's something else going on under the hood then? Do you think it's maybe when I heard a statistic or read a statistic from a quarterly statistic about evictions and foreclosures. Sorry, foreclosures is up like 25%.
it's nothing. It's zero. It's almost zero. This is some more interesting information.
That was a national number that I heard. So Pinellas isn't. They're not feeling any foreclosures yet.
No.
Zero.
I mean, just about zero. Yeah, there are no short sales to speak of, and there are no foreclosures to speak of. Like in a typical month in Pinellas County, you might have one or two of each one of them. So you'd think at some point that things would catch up to people, but so far it hasn't reared its ugly head. So.
Are you familiar with going on the West Coast at all? Do you have any?
West Coast,
Do you have any associates out here? US.
California?
Yeah, no, let's say California, Arizona, New Mexico.
No, I don't know what's going on out there,
Okay.
so I can't speak to that.
Okay.
Yeah, but there's so many people still moving into this state for a variety of reasons, mainly the sun. There's still a lot of demand out there, but they're still having problems are that the prices have gone up so much. Just to give you an example, right now, this is the median price single-family house now in Pinellas County is $430,000. It was as high as almost $500,000, and historically it would be maybe $375,000, and this has gone up so much. The average sale, now the median, of course, that's the midpoint of all sales. The average sale is $579,000 now. In this area, doesn't really have that many good-paying jobs that people can afford to.
So the prices have become unaffordable.
Yep.
Because of rates and how high the prices, and they haven't come down.
They have not come down. The one thing you did see is last year when I mentioned all the multiple offers over asking price, and people were foregoing inspecting the house. They would pass on inspecting the house. So who knows what they bought? but they were putting these high numbers out there, still getting multiple offers, and selling for, on average, about 5% over their already high asking price. Now, they have been reducing things, so now they're selling for about 5% less than their asking price. So it's been an adventure when you get a listing. If somebody, their neighbor sold their house last year, they think, oh wow, I should be able to sell mine for more than that, not realizing how things have changed dramatically from one year to the next.
Instantaneously, look from the data that you showed us. Over a month, essentially. It was June of 2022,
Right.
June to July, July to August. Things rapidly changed.
They have, and the amount of time that things are staying on the market are way out there right now too, because the median time to contract now is 33 days this year. Last year, same month, 7 days, 7. So it was on
That's
average.
a completely different market then.
Yeah.
What? All right. So we know what happened now, and we know the dramatic shift that took place.
Right.
You're the agent. You're the advisor of buyers, sellers, investors. Why don't we touch on each one? What would you advise buyers to do?
Well, obviously, if you're a new first-time home buyer, or someone with not enough money to put down very much, I mean, if there's any way you can possibly put together enough to put 20% down on a conventional loan, by all means, try to do that if you can. The VA loans, in addition to having to put nothing down for a vet, which is, I think, more than fair what they've gone through. It's easier now than it was in the past, but historically, a VA loan was much more difficult to get through because they have a VA inspector / appraiser that looks at the house, and they will pick apart even the nicest house, which would cause the seller to have to pay money to fix things that they wouldn't in either a conventional loan or whatever. So the veterans, they want the veterans to basically move into a pristine house. So
can you be a family member of a veteran to get a VA loan?
I think you have to be a veteran.
Okay.
Yeah. Yeah, and some lenders specialize in that. Most of them, it's just sort of a sideline. Overall, I just ran the stats the other day. Of all the loans, only 3% are VA loans, and FHA loans are about 5 or 6%.
Wow, so it's really
Conventional loans are all the rest.
Yeah. So it's really tough to get the VA loan then. You
Yeah.
gotta meet some strict criteria to get past that.
You do.
Okay.
So for a buyer, they're really they're still going to be scrambling trying to find some place. It's a shame, but.
Would you say wait if you can, or do you
Yes.
tell them to? Okay, so you tell them wait.
I would say wait. I mean, it's either that or they're going to be very disappointed a lot of times. I mean, you can hope that one's going to go through, a transaction, but I would say it's not in your favor. So, you
Because of the affordability and the rates.
Yeah, and again, the problem is that the rents have gone up along with all the prices. So these people who had been renting someplace for $1,800 a month are now paying $3,400 a month, or trying to. So it's a catch-22 sort of situation. So you just have to monitor the market and see when, or set your expectations lower. I guess that might be another alternative. And instead of needing a 3-bedroom, 2-bath, maybe you can get by with a 2-bedroom, 2-bath. Anything at all you can think of to make it better for you.
Did you hear the FOMC meeting last Wednesday? What Fed Powell said?
I did not.
Okay. Well, I'll give you a little, just a quick summary.
Sure.
They did another rate hike, 25 basis points, and essentially they told us that they're going to pause the rate hiking campaign, and it's essentially because of the bank issue with SVB Bank and Signature Bank, and then First Republic looked like it was teetering, and there was a few other ones that were in question that have just a ton of their depositors, or the uninsured depositors that have all their money in these banks because they're getting preferential treatment, whatever the case is. But the banks, their assets were very risky, and when rates went up, they had to go and sell their treasury bills in the open market, and they were on their balance sheet. It looked like they were one value, because rates went up, the value of those bonds go down. Rates go up, bonds go down, and then they can't issue any more bonds because their rates are higher, and they got to pay more interest to the open market, the people that buy the bonds. So They're going to pause the rate raking campaign, but they said that they're not cutting. They don't plan to cut this year. They plan to keep rates as high as and long as they possibly can because they have to defeat inflation. That's what their mandate is, price stability. So with that in mind, they're telling us that in the real estate market, they mentioned the real estate market too, and I think that's something that they were saying that, hey, you know, we have to defeat inflation. We're going to keep rates high. Just be ready for that, folks. So if you're a buyer, you're thinking in your mind maybe like, well, they're going to keep rates high. I might as well buy it. But then they're also, the counterpart is, I can't afford it anyway, so the sellers have to bring the prices down. Yeah. Is that what you're thinking?
Yeah, educating the sellers is a big deal because of what I just mentioned before, because they still have this thought in the back of their mind that, you know, and the prices are going up. I mean, so it's kind of tough to tell them be more reasonable when they say, well, look, the prices continue to go up. So it's a constant struggle. I took a listing for a very small house, a 2-bedroom, 1-bath house in Largo, in a nice neighborhood, and owned by a family. Somebody who died, and the 2 sisters were selling it. And so their initial thought, this is an 880 square foot house that needed
880 square foot? Yep. Oh, it's okay, it's a little house.
Yeah. So 2-bedroom, 1-bath with a single car garage, and it was like time stood still in 1976. So they initially wanted to sell it list it for $400,000. So I had to run some comps, and I did 2 different ways. I did the real comps, the way you normally try to find something similar to that, and then I looked at houses that sold between $375,000 and $425,000 and compared that to what they had. And that's what finally changed their mind to reduce the asking price to $275,000.
Wow, that's a big reduction, okay.
Huge, $125,000, but we got a contract on it, and as luck would have it, the buyer didn't care that it did get inspected. In an older property, you have to go through what's called a 4-point inspection. So it's the electrical, the plumbing, the roofing, and the AC.
That's a good one. Okay.
It failed every single one of those.
Oh, did it really? Yeah. So what's the cutoff? How old is the home for the 4-point inspection?
Well, it's 30 years, but a lot of times the lender will require it anyway. And it's always good to get a 4-point inspection because you have a regular inspection, and this is sort of a subset of that major inspection, but it just hits the high points, the pricey things that you have to worry about. And if it does fail any of those, the problem is you cannot get insurance.
So that the home, in this case, you're representing the sellers, yep. And the sellers go and pay for the 4-point inspection to.
Yeah, the buyers do.
The buyers do. Perfect. Okay.
Yep. So the buyers do, and if it was a cash buyer, luckily, because it needed everything, including a new roof. But if it needed any one of those 4 things corrected and the seller wouldn't do it, the buyer cannot get home insurance on it, homeowner's insurance on it, and so they can't get a loan. So you have to or sell it to a cash buyer like this particular one, and this buyer actually.
Wow, that can cause a lot of problems then.
Pardon?
That causes a lot of problems if you're trying to get a loan and then they fail the 4-point inspection.
And the seller won't correct it. Right. So yeah. So when you have something like that, cash buyers are pretty much your only option, you know.
Or fix the problems, which who knows.
Or the seller, and they didn't want to spend any money.
Who knows how much that's going to cost. So I guess lowering it, get them to wrap around their mind that, hey, the markets from last year to now have completely changed. And how long do you want to sit in the house, right? Is that what the higher the price, the longer they're going to be sitting on it right now. Things are going to get more competitive.
And when you have a seller who's invested in this property, it was the family home for these people, and so there's a lot of, you know, emotion involved, and that makes it even more difficult. If it was a straight business deal, it would be different, but this is the family's home.
Okay, so buyers, patience could be your best option at this point, unless you find a really good deal. You're a cash buyer. Investors, we'll get into investors in a minute. Sellers, what are you telling what would you recommend to your sellers?
Well, you have to educate them on this is not last year, and things have changed dramatically. So if you want to sell your house in a reasonable amount of time, you have to price it competitively, and so you give them as much information as you possibly can and explain to them why you're doing this, because there are very few houses going on the market now. I mean, we have a bunch of inventory, but sellers are now reluctant to put their houses up for sale. And if they do decide to do it, You have to explain to them this is the reality. And in a tight market where there's not that many listings, a lot of realtors will buy the listing. They'll tell them that they can get more than they really could, assuming that they will eventually lower their price. And that's part of the, unfortunately, that's part of the real estate business. But I'm always...
So they hype them up and they say, hey, you know...
Oh yeah, you can get more than that. Yeah, and they know that they can't. So yeah.
Because they're playing with the old numbers.
Yeah.
What do you see for vacancies? Could that market really... Because I know a lot of people have second, third houses around here.
Yeah, they do.
A lot of people. And they're not, this isn't their full-time, they're snowbirds. They have a house here, house up there, they have a rental down here, they don't even come.
Right.
What could that be something that's a risk on the table for the housing market over here? Could the vacancies start to uptick if they see a flood of inventory, or investors start to sell houses? I mean, you have institutions that own tons of places around here too, and they really have a serious stranglehold on the prices of the markets around here. So could we see a flood of inventory because of vacancies?
I don't think you would. You know, a lot of people who have their second homes either have a lot of mobile homes or very small homes. They don't want to have the upkeep. So I'd say the vast majority of the snowbirds live in some place where it's maintained year-round by somebody other than them. There was a huge issue here. You know, there's been a collapse of a couple of very large investment companies that, you know, their business model was buying single-family homes, renting them out with the idea of selling them in about 5 years. That all took place several years ago, and both of these big ones, who will go nameless, but you would recognize the names for sure, they've shut down that end of the market, and one of them, just one of them, had 17 or 18,000 single-family homes around the country, focused in Florida and Arizona and places that Nevada.
Sunbelt states.
Yes, definitely Florida. And so they had so much inventory, and they were buying these things with the idea that they were going to increase. They never saw a downside, and then all of a sudden they did. And so they did flood the market with these homes because they tried to get rid of them. They had half of those homes, I was just saying, were just under contract, and they had to go ahead and close on these even though they knew they were going to lose money. And so they laid off a bunch of people, and so that flood of inventory is sort of dissipated right now, but there's still some on the market right now, and they're very difficult to deal with too. It's almost like a...
So what do you tell sellers? Wait, or do you get it on there and be reasonable? If you want to sell,
get it on there and be reasonable. Okay. You know, and be, you know, we're going to test the market. See what kind of response we get. So we have a lot of activity, no offers, and it's a decent house, then it's the price more than likely. It's either price or condition normally.
Strategy. Do you list the price a little bit higher than you think that you could get? Then to, let's say, hey, you know, we didn't get it, let's go ahead and lower the price 30 days, 90 days later. Yeah. Does that look bad when you cut the price?
It doesn't look bad, but you have to make your move very quickly. If you leave it set on the market for a month, for example, then it starts to get stale. Then people wonder what's wrong with the house. You may not know it's just a pricing issue. They just think there's maybe something wrong with it.
So timing might be more psychologically important than the actual price cut itself.
Sometimes I would say.
Interesting. Okay.
Yeah.
So I would be more concerned about my price sitting on there. So I could put it a little bit high. I just got to be reasonable and be able to cut it within a good amount of strategic timing on that. Okay.
That's the conversation I always have with somebody is if you insist on doing this, I agree that we can give it a try, but you have to be willing to move quickly to chop that price down to where I suggested. And most of the time they'll do it, but you have some people that are pretty hard-headed, and I want to get this, and you have to explain to them. It doesn't matter what you want or what you need. It's what the
market dictates. Yeah, the market dictates what's happening, and things have changed. Right. All right, last one. Investors. What are you telling them?
If you're a long-time investor and know what you're doing, they are completely out of this market right now. I know one personally that I've worked with several times over the years, and this gentleman purchases almost everything from the county auction. Goes online, very savvy, knows exactly what he's looking for, and he's been sitting on his hands here for quite a while because the prices are so insane in the regular market. Now he can still get deals on the auctions because the bank wants when and if they do foreclose, which is not very often now. He knows exactly what to look for, and these professional investors a lot of times, if instead of they'll work together with the handshake instead of driving the price up on something being auctioned. They will agree that let's do this together, and we'll split the proceeds. And if you think you're have any other real job, and you decide you're going to be an investor and get in, you're going to get. It's not going to be pretty because you'll be buying something that you shouldn't because it won't make any sense. Because they know exactly how much they have to put into it to make it saleable, and where it's located. And
so a seasoned investor, fare better. Yeah.
And I found that out way back in 2004, 2006 when we had that huge run up there, and I was relatively new to the business. When you would talk to an investor, they would tell you the exact same thing back then. They're not going to buy anything until this thing calms down. And of course, when the market collapsed, they just jumped all over that stuff. Yeah.
So you're seeing the seasoned investors right now be really patient and sitting on their hands.
Very much so.
And then they're waiting for. I mean, I think the writing's on the wall right now, and how things have changed so rapidly that it would be in their best interest to be patient because
I think
one thing I noticed about the real estate market over the last 100 years, I mean, you look through price history, data, some of the statistics that you showed me, it's a fairly predictable market. It's slow moving, and it's methodical, and then sometimes it can change on a dime, like 2008 or maybe perhaps last year, June, July timeframe. So that's interesting. And everyone's got a little bit different strategy, but it sounds like being patient, finding the right deal for you right now is the right move. There should be no hurry at this point. Just find what's good for you. All right, what do you see for the real estate market for 2023? I
think we're going to see more of the same. Things haven't shifted at all. I mean, they're still heading down the same path right now. So I see the same thing for the rest of the year, something very similar. Sometimes things change and it doesn't seem to make any sense. Sort of like the stock market sometimes, where it takes some crazy, and you go, what? Why? That doesn't make any sense. So you don't see that to the same extent you do in real estate, but. We have, you have a national economist, you have a Florida state economist, and anytime they talk, especially the state individual, she's very sharp, and so I always listen in on the meetings that they hold, and they haven't had one here recently, but the last forecasts have been continuing where we are right now. Inventory continuing to build up, and it's not a good match for what people can afford to pay and what's on the market right now, because we never had as many high-end listings as we do now. I mean, it's just insane. I don't know if I can quickly get to some of these, but they have it broken down by price point.
So you have the super wealthy putting their homes up for sale at this point.
Yeah, absolutely. Yeah. Let's see, summary paid cash.
Where can we find this data there, Jim?
Well, you can't really. This is from the Pinellas Realtor Association. So,
So you need to know a guy or a gal.
Yeah, pretty much. Yeah. So again, it's a bad match of the prices that are out there and what people can afford to pay. So there are a lot of listings right now. I mean, you can't find really anything to speak of under $350,000, which used to be sort of the midpoint not that long ago. And that's more affordable for the amount of money people make in this general area. So the listings are, $500,000 to $600,000, are tons of them, and then up to $1 million, a lot more, and then over $1 million, an incredible amount of houses. And if all you have to do is look at the Sunday Tampa Bay Times and look at the sales there to see what things have sold for, and you'll be scratching your head because you just think, oh my gosh, How could something like that cost that much?
I was looking at some properties over by the Belair Country Club, and I'm just waiting. We're waiting for the crisis to come down. I'm hoping. It's going to be a nice place by the golf course.
Yeah, you might be able to get one.
Jim, where can our viewers reach you? How can they reach you? Is it best to reach you by phone, email?
Either one. Phone number is 727-278-4711, and my email is jimd, as in Daniel, Moran @gmail.com.
Beautiful.
So.
We're going to make sure we put all of your contact information below here. And if our viewers need an expert real estate, seasoned, 2 decades of experience, give Jim a call. He's happy to get you taken care of. So thanks for joining us today on Your Investment Advisor channel, where we decipher the markets. Tune in next time. Thank you.